You probably now are trying to fundraise money from the investors and wondering how they take their decision, what they look into when they are meeting with investors. Well, today we are going to discuss it in very detailed way, so you have the scenarios of investors thinking and you can apply it into your pitch. I have with me today, again, Angelica Morrone, a hedge fund manager and an angel investor who invested already in 17 companies. We've done already 2 talks on other important things for founders starting their companies and achieving their results. Please go on our channel and watch them. Don't forget to subscribe, press the like button, and of course, if you have questions, you can go on our comments and ask. We'll be happy to help you. Well, great to have you again, Angelica. Thanks for coming. And we look forward to get started with a new topic and figure out what investors are thinking about.
Hello, Daniel. It's wonderful to be here, and thank you everybody for tuning in. I wanted to speak with you about today is the different reaction and the different ways in which an investor usually approaches their investment decision and their engagement decision. I am talking today about the 3 stages of involvement, calling it the investing in the age of engagement. Because nowadays, if we don't do that, it's very difficult to understand that engagement is the ultimate result that we want to get from our investors. The 3 stages are usually interest, infatuation, and engagement. If this sounds a little bit like going out with a lady or a man, in a way it is. I always say that the relationship with an investor is a little bit of a personal relationship, and that's why it's important to read the signs and see what they're thinking. So the signs are the investor is usually interested, has already invested in your sector, has already invested in things that are similar to your sector. And you, on the other hand, sitting on the other side of the desk, know the difference between when an investor is just being polite and when an investor is being interested. And those are already 2 very important things. Also, please remember that the geographic location is important to the investor. This does not mean that the investor has to be in the same country that you are in. It only means that there is some kind of link between the country your company is located in and the investor's interest and the area of interest. Let's talk about interest. When you have somebody calling you, I wanted to bring you an example of something that actually happened to me. Somebody contacted me about private transportation lines for disadvantaged people in Western Africa. And that sounded like an interesting impact project. However, let's understand what worked and what piqued my interest. First of all, what did not work was the fact that this person, this entrepreneur, contacted me without any prior interaction. Just out of LinkedIn, he sent me a pitch deck. Secondly, he contacted me without having any common point of contact or point of interest. So he had not listened maybe to any of the topics they talk about, or he had not listened to anything that I invested in previously. I think he was just spamming this deck on anybody who was listening, who was willing to listen to it and read it. But more important, there was a lack of alignment. Why? Because if you think that I was investing in things that are reducing carbon emissions and you're offering private transportation lines, all of a sudden there is a lack of alignment, and he should have detected that right away. Also, lack of geographic relevance. I have contacts and I invested in many areas from North America to Europe, all over Western and Eastern Europe, some parts of Asia, but I do not have any context or connection in Africa. So there was that lack of geographic relevance. What happened? What happened that he was not even able to get my interest. Or better, I was interested because as an angel investor, I always try to give some context and some advice, but it couldn't get my interest in actually investing. Let's talk about the other one. The other stage is infatuation. And how can you tell if the investor is getting infatuated with your idea? First of all, he or she listens, asks some relevant and some specific questions. After you're done speaking, the investor will ask even more details on the company, on what you have done. And more important, he or she will want to meet the team, will want to understand where you are, if you have an office or if you have a prototype. These are three very important signs that you're not really being polite as an investor, but you are being infatuated, not yet engaged, but you're really liking the proposition and you're willing to know more about it. And what happens? Let's say that, well, let me bring you an example. I had a project that was based out of university spin-off in Italy about a sustainable textile fiber from the broom plant. The broom plant is an invasive plant. It is very sustainable. The project has a lot of sustainability embedded into the project itself. It had innovation because it was taking an invasive plant and it was turning it into fiber to make clothing. It had geographic relevance because it was in an area in which I already had familiarity with. It had a very, very good market potential. And I could see that from the beginning, from the very first pitch deck. But what happened? As I started to speak with them more, meeting with the team, going to see where the stages of development were, I realized that the team was not adequate. So I had been interested, I had been infatuated, but the fact that the team was not adequate left me not engaged. So let's go to the third part, the engagement. What happens when an investor is ready to be engaged? Usually, she or he will ask for more meetings to get to know you better and to get to know the project better. It will meet and it will want to interact with everybody in the team, or at least the key people in the team. Definitely, if there is more than one founder, the co-founders and the key people who are bringing the project along. Thirdly, he will comment or she will comment on the subscription document, which means this is a very important area, because when I read 60 pages of subscription documents, it means that I am very infatuated and I am ready to be engaged. Otherwise, time is the most prized commodity that we all have. I would not go and comment on the documents until I am almost ready to do to actually do the investment. Also, from the questions that the investor asks, you can tell that she's looking for reasons to say yes to the investment. Let's look at one example of how I said yes to a project. In this case, it was a longevity food system that was backed by science. This company is based in England, and there was already an interest alignment. So the entrepreneur had been very intelligent in studying what were the topics that interested me more and that I had already invested in. There was the concept of innovation. I was interested in a new system, in a new way of doing things that it would improve the life of many, many people all over the earth. It had an excellent market potential. As we know, a lot of people on earth are getting illnesses that can be preventable. So that would have a huge impact. Also, it had the geographic relevance and proximity so that I could visit the company, I could speak with them, I could have an interaction that was extremely important. And I said yes, and I invested in this company. This is one, as Daniel explained, one of the 17 companies that I currently have startups in my portfolio. So what is the message that I would like to leave you today with is watch for the signs. First of all, research the investors before you pitch. Ensure that you really understand their area of interest, and then pitch specifically to the person or to the fund according to the interest. So highlight the things in your project that are better suited to their interest. Very important point, learn how to close a deal. Do you know how many times young entrepreneurs come to me, we talk, I am very engaged, I'm ready to do the investment, and they do not know how to close a deal. They do not know how to get me to say yes. and pushing down investment papers in front of me is not the way, or is not the only way. Another important point is be data-based. Do not say, I think, show me the data that support your hypothesis. And also, if you are sure of your data, be persistent. Be persistent, but don't be pushy. It's very, very important for an investor to know that you are committed, but on the other hand, that you're not pushy and that you're not pushing them in a corner and forcing them to make an investment decision. These are my little takeaway points for today.
Quite common situation that you cannot find investors' criteria. How would you find them if it's not publicly published anywhere?
So that is a very good question, Daniel. Thank you for asking it, because the only way to find them is by knowing people. So as I already mentioned in the other time we met in the other podcast, you have to go to angel meeting, you have to go to pitch events, and you have to see which investors are interested in which company. It's not a research that you can do online. You have to invest a little bit of time, because if you find the right investors, you can really get to the point. Also, there are some tools like LinkedIn. I'm not advertising LinkedIn, but it is a very good professional tool. And you can use that, because in the investment description, even in the tagline of the investors, sometimes you can find exactly their area of interest. Or if you scroll down, you can find what other companies they sit on the boards of, or they are advisors of. And this gives you a very good indication of what they're interested in.
Yep. And if you prioritize the key criteria usually investors are looking for, and the founders would get a chance to ask, like, what's your key, your focus criteria? What would be the first 3-5 would you recommend to ask about?
So first of all is it's important to understand if the investor is ready to invest. In the United States, they have this expression, if they have dry powder to use, or if they're already allocated for a certain amount of time and they wouldn't be interested in investing. Secondly, if the sector is of interest and if the geography is of interest. And also, you have to understand what is the average ticket size that this investor is interested in, so that you don't go to an angel investor asking for 5 million and you don't go to a venture capital fund asking for 50,000. Okay, that's extremely important. So the relevance of the ask has to be paramount to both the sector of involvement and the geography. Of course, there has to be some dry powder ready to be deployed.
And that was Angelica Morrone, and we were talking about how investors are thinking when they are meeting entrepreneurs and their decision making and their expectations versus what entrepreneurs should know about them. Well, before I let Angelica go, guys, please press the like button, subscribe to the channel, ask your questions below. We'll be happy to answer your questions and help you with your fundraising efforts. Thank you so much, Angelica. I really enjoy our talks and look forward to our next one.
Thank you very much for having me. I enjoyed it as well. Goodbye, everybody.